After weeks and even months of canvassing and lobbying, the 24th of August 2016 will go down in the annals of history as the day the country introduced controls on interest rates. President Uhuru Kenyatta put pen to paper, effectively granting the force of law to the Banking Amendment Bill, a proposed piece of legislation that had fiercely been resisted by financial institutions, much as it was being embraced by millions of long-suffering borrowers. Banks will now be compelled to charge not more than 4 percentage points above the base rate set by the Central Bank of Kenya. The CBK rate currently stands at 10.5%, and as such, banks will have to charge a maximum of 14.5% interest on loans per annum. While giving his consent to the law, President Kenyatta said he shared concerns that Kenyans have for years been left frustrated and disappointed by the lack of sensitivity by the financial sector and particularly banks. The bill was assented to despite concerted efforts by banks to have it sent back to Parliament to pave way for dialogue between the lenders and the legislators. Banks have for the last 2 weeks mounted a spirited campaign to convince the president not to assent to the bill, and even went to the extent of dangling a 30 billion shilling fund that will be advanced to small and medium enterprises at rates below 14%. But the president blamed the banks for the eventuality, saying the financial institutions failed to live up to their promises of changing and regulating themselves for a long time as interest rates continued to soar. This, he said, despite 2 previous attempts to introduce caps on interest rates, one by former Game MP Joe Donde in 2001 and another by the current Game MP Jacoyo Midiwo in 2015, that the bank successfully thwarted. It's what many are saying is a bold move by President Kenyatta. But what are the repercussions? Banks have already stated that the risky borrowers, who are the majority of borrowers in Kenya, will find it harder to access loans. How this will affect the low-income earners' need for credit remains to be seen. Hussein, Mohammed, Citizen TV in Nairobi.